Welcome back to my channel. Balance sheets matter. The oracle of AMC stock. I saw where AMC stock was going over a year ago. I did a video on November 28th titled Ape stock will be used by hedge funds to crash AMC short seller plan exposed. And since then, you look at the chart from when I proposed it, AMC crashed 90% and everything played out exactly as I said it would. So if you want insights of where AMC is going now, where I actually may buy AMC, you're going to want to continue watching this video. But first of all, you should watch my previous video, how ape stock will be used by hedge funds and short sellers to crash AMC stock. And I basically covered up the fundamental setup, which will lead to hedge funds and short sellers using ape stock to crash AMC through an arbitrage opportunity. And this was before Anther Capital even was on the table. As you can see in the article here, on December 22nd, this is basically when Anther Capital bought a whole bunch of ape stock at 66 cents a share, and they basically said on these terms that we're buying all the stock, we also need a vote to go through, as it's saying in the title, for the reverse stock split, which eventually happened. And as I predicted in this video, it basically crashed AMC stock. So we're going to dive right into AMC stock. I'm going to show the financial problems with AMC and what's going to be happening from here. So basically, you can see in the analyst projections here, the revenue trends are expected to slowly creep up, but it's still way off the peaks here. And if you go in, what's the overall problem? Well, the number of movie tickets sold by US and Canada, it used to be at these levels. Then we all know what happened. It went down to nothing. And while it is recovering, it is nothing close to what it has before. And it may take a lot longer than people expect. And, you know, people have been hearing the whole Rona's coming back basically this year. You should watch my other video, Dividend Investing in Alex Jones. Actually, it's the Pfizer stock analysis there, where we dividend invest with Alex Jones to see if Pfizer stock's a good buy. So you might want to watch that video. But as long as there's these scares coming up, it may keep people from going out, going to the movies, getting those numbers back. So even though AMC is improving, is getting back, there's still a lot of work to go, and any more hiccups could really knock them down. But let's go into the fundamentals. Let's look at where AMC stock could go and what a fair value for it will be. So you can see the problem here. They got up, and even before basically 2020 and all this happened, the big problem was AMC did some very large bad acquisitions. I think Adam Aron is being basically a terrible CEO, and basically that's why AMC stock, even before 2020, was crashing, because he did this horrible acquisition. It basically cost the company way too much money. They're burning all this interest expense. Their interest expense is higher than the operating income. So they were basically losing money every year. And this basically just accelerated with, you know, everything being locked down, no one going out to the movie theaters. And even though things are recovering, it doesn't matter. Taylor Swift, this or that, all those things, people going back. That's the bear case minimum for AMC to get going. But you see, the problem is they're still paying the last year $400 million in interest expense, $100 million a quarter. And previously, this is peak AMC when they had $5.4 billion in revenue, and they're not even expected to get back to that in the next 2 years. Their operating income was only between 200 and 300 million. So with the expected numbers going forward, even in a bullish scenario, they need to cut this interest expense probably at least in half, or else AMC is going bankrupt. Other big issue is there's been a massive share dilution after all the splits and all this nonsense. Effectively, they had 11 million shares before, and this is up to 171 million. And I have another prediction, which I can almost guarantee will come true unless they go bankrupt first. They are going to max out their share count again. So you can expect this share count to go up to 500 million, since they're going to need to do that to basically stay solvent. So let's dive into the balance sheet. Here's the real problems. You can see their cash and cash equivalents has been ticking down, ticking down. You see, like from June 22, 965 million, 685 million, 632 million, 496 million, 435 million. When this reaches zero, AMC is bankrupt. They need to raise capital. They're starting to do that. But this gives us total current assets of only 700 million. The big problem is their total current liabilities are 1.5 billion. So in the next year, they cannot even pay all their total current liabilities. They need to raise capital now, and that is what they're doing. And it's going to be driving the share price a lot lower, in my opinion. They have total assets of 8.6 billion. It's pretty relevant. A lot of that is intangible assets. What it really matters at the end of the day is they need to get their long-term debt down. Their long-term debt right now is at about 4.8 billion. They have been slowly paying it down as they have been raising more capital. But look at their interest expense. I know some of their bonds they have out there at higher rates, and if they get those paid off first, their interest expense can considerably lower. But in my opinion, this probably has to be cut in a minimum and a half. And at the rate of how many shares they can issue, I am very questioning if they can do that. You just do some quick math. They issue 350 more million shares, approximately maxing out their share count. Even if they get an average of $5 a piece, which I think is unlikely since it's going to be driven lower and lower and lower, that would only raise $1.75 billion, which it would put a significant dent in this. It would bring their interest expense, their total long-term debt down to $3 billion, but this may not be enough. So what's going to be happening? Well, there's going to be another reverse share split unless they go bankrupt, but as long as there's a lot of interest in AMC stock, and American keep selling new shares in the market there and hopefully basically keep his job and his tens of millions of CEO salary coming in, screwing over all the common shareholders, which has been happening. So for me to ever basically buy AMC stock, I'm going to need to see them get this debt under control. And once this debt is under control, then we can actually do some calculations. We could basically look at what their income they're bringing in is, and maybe their operating income is going to be a few hundred million, whatever that's going to be after interest expense is whatever it's going to be. But you just do some quick napkin math on this. If they were bringing in basically $100 million on this bottom line net income, which will require them to pay off a lot of debt, they're probably going to be maxing out the share count by then. And by my estimates I calculate before, that would be an EPS of about maybe 35 cents a share. You give that a 15p multiple, we're under $5 a share, and that's a very optimistic scenario. So I'm not touching AMC until basically I see them pay down their debt. I think the share price could easily go down 90% or even more from here. In fact, if AMC ever does get to a good value, the share price is going to be so low, it might actually be a good value at that point. But be warned, AMC is not in good condition. More dilution is going to come. There's going to be a lot more shares flooding onto the market, driving this price lower. So remember to smash that like button, subscribe to my channel. There's other good stocks to invest in. You can dividend invest with Alex Jones, invest in Pfizer stock. I think that's a good value now. I own some Pfizer stock, and I'll see you in the next video.